Hey everybody, Jerome Maldonado. I wanted to talk to you guys today about the housing update. So we're in October, moving in towards November. So we have the September statistics have come out, and I wanted to run through them. Just did a lot of research on what's happening nationwide and where we are. And so I'm going to kind of run you guys through this. So there's some changes that have happened to some of the lending processes that are going on. Freddie Mac has released what's called Home Possible. Home Possible is very similar to what was happening in 2008 in some ways, and then some variances. But this video is not really about that. I'm going to bring it up because I am going to do a full video in regards to that. But basically, where Freddie Mac is underwriting loans where you don't even have to have C credit, you can have D credit. They'll lend you up to 105% of the value of your home. But there are some parameters they're putting in place, which is good, very different from what they were doing back in 2006, 7, and 8, and that led to the housing crisis, but there's a lot of similarities as well. So smart, not smart, we'll talk about that in another video, but just to know that that's available out there for people that want to get home equity lines of credit, mortgages in excess of 100% of the loan to value ratio of their home. Freddie Mac has implemented Home Possible, and this isn't just new for last month, but it's starting to trend a lot more. So how does this affect us? You know, right now we're sitting back, we have a depreciated amount of inventory on the market, right? So we have an inventory crisis where there's a lot of homes that are needed. And when we take a look at housing, we sit back and there's a lot of factors that affect the statistics that I'm going to talk about here. So this last month, multifamily is rebounding from the forbearances. Multifamily, along with retail and industrial, has recovered extremely well. With two sectors of real estate still being extremely affected by the pandemic. And one of them is office, and two is travel and leisure, hotels. Because the Delta variant still has over 97% of our population holding back from going back to work. So with 97% of our population still holding back from going back to work due to the incline of the Delta variants, there's a lot of people that are still sitting back in reserve. Hence, office and office assets have still been taking a hit even through the month of September, moving into October, and travel and leisure activities have still continued to decline, and so hotels still taking a burden financially due to the Delta variants. So those are two market sectors that have not yet rebounded, although the good news is that obviously, single-family homes are doing well. There's a lack of inventory. Multifamily is doing well. Retail has started to rebound, and industrial is starting to show promising effect. The average home sales price is up to $352,500 per median home for the month. The average days on the market this month was 17 days on the market. And here's what's crazy, is that 17 days on the market compared to 21 days on the market a year ago, meaning that the strength of the market still continues to go up. And what's surging that? Well, most of it's probably the lack of inventory, because most people that are going in looking at homes have had, when they finally get a purchase agreement set in place, they've already put offers on 2 prior homes, and their 3rd to 4th ones are the ones that are actually taking place. So 44% of purchases are above list price nationwide as of the month of September, okay, per monthly statistics. Now, 86% of these sales have closed in less than 30 days, which means that banks are moving quick. So in spite of how busy everybody is, institutions and title companies are working hard, and over 86% of these purchases have happened in less than 30 days, which is unheard of. Most home sales take 30 to 45 days to close, and with 86% of what's going into pending is closing in less than 30 days, which is unheard of. Absolutely incredible that they're able, with as busy as we are, to be able to do that. Now, I'll tell you guys that June of this year, of 2021, over 55% of home sales were over list price. Now it's dropped to 44%, but still showing a lot of strength in the market. Traffic has decreased, and what's the contributing factor to that? Okay, so the month of September, if a realtor took 50, the average realtor would take 57 showings through the month of September, whereas in the month of August, they were showing 61. They were taking 61 showings, where a year ago, they were taking on average of 75 showings. So it's decreased by over 20 showings, or right around 20 showings per month per realtor. And so a lot of factors contribute to that. Some people would look at it and say, okay, well, why are less people looking for homes and why are there less showings? Well, part of it is there's a lack of inventory. There's nothing to show people. And so when you have a lack of inventory, even if people want to go see things, it's hard to show them properties that don't exist. So with the lack of inventory continually going up is the problem that we're seeing. It's not the fact that people don't want to buy. It's not the fact that people don't want to be shown homes. It's that there's just a lack of inventory that continues to grow, and the problem continues to rise. So there's a continually rising problem for the lack of inventory on the market today. You guys have heard on the news. In fact, I was on the treadmill yesterday at the gym, and there was an entire segment about what's happening right now with everything that's going on in the market. There's a lot of freight issues where there's over 80,000 truck drivers that are needed across the continental United States just to fulfill the current need of transport, even in local demographics. So not just nationwide, like, there's inventory prices, there's issues with people being able to freight things from our harbors, like in Long Beach was one of the big examples, stuff coming into Detroit, stuff that's coming in from the East Coast. They're coming into these big shipyards, and there's truck drivers that are waiting in excess of 7 hours just to get a crate put on their truck so they can take off. We need over 80,000 truck drivers right now. I was on the interstate last week, and I was following a truck, and on the back of the truck was a banner that was bungeed or affixed to this back of the semi-truck, and it said, starting now hiring, starting at $2,500 per week. So ladies and gentlemen, you can go out and make $100,000 a year, in excess of $100,000 a year, $120,000 a year, by just going out and driving, but by being a truck driver right now. And so the CDL requirements, people are going to truck driving school, but there's not even enough equipment. So even if we fulfilled the 80,000 positions that are needed, there's not enough equipment on the shipyards to be able to get these trucks loaded and get this inventory and these products out to the marketplace. So there's not a lack of employees on the shipyards. That was one of the things that was in the interview, was they sat back and they said, no, there's plenty of people that are union workers that are on the list that we can bring in and have them work. The problem is that we need more equipment. We don't have enough equipment to get the boats unloaded and get them on the semi-trucks fast enough and then get them out to transport. So anyways, that's a major issue. So one of the big things with the inventory crisis is, there's just not enough out there. Now, one of the big things that contributed to the September market was the type of real estate that people were actually purchasing, okay? And so we'll talk about why vacation investments are down by 13%. And most people might be thinking, and it's probably a mixture of two different variables. One of them being the Delta variant and people just not traveling as much, but really there's a lack of inventory in the vacation rental market. So it's down by 13%, which the vacation investment market accounts for 6% of the entire real estate market. So 6% of homes that are being purchased by people buying secondary homes in vacation markets. Investment rentals are down by 7%. That's not because people don't want to invest. There is just a lack of inventory of what investors can purchase. So the reason is that there is not enough properties for investors to come in and consume. So compared to last year, it's down by 7% more so because of the lack of inventory than their desire to purchase rental homes, right? 85% of buyers and this is important. So for those of you guys who follow my content and you guys are looking at saying, okay, well, where do I look for land to buy houses? And where should I be buying investment properties? Or what should I be purchasing for myself as an investment to live in? Or what should I be my next move in regards to working with Jerome Maldonado and buying land and building houses? Well, this might help you decide on where a good area to buy would be. Last year, only 39% of home buyers were looking for homes in suburban areas and in small towns, rural towns, and in resort areas. It has increased in the month of September. Over 85% of home buyers purchased homes in suburban, small towns, rural areas, and resort areas. So ladies and gentlemen, we are up by over 45% in suburban and rural area, people moving into suburban and rural areas. And so that is an area that would show interest to me in buying land and building houses. It just so happens that those have been the markets that I have been penetrating since post-recession in 2008, is those more rural and small town areas that encompass around big cities, right? So you don't go into the middle of Timbuktu and start investing in land and building houses in farm towns that are hundreds of miles away from big cities. You just go out in the suburban areas just outside the city. Most people are leaving congested inner city living areas and they're moving and migrating outwards compared to last year. Now, what's the reason for this? A lot of it probably has to do with the pandemic. People not wanting to be in dense, highly populated areas for health reasons, right? And so people are moving into the suburban areas, and this is where they're investing in capital, their capital into houses to raise their families. A more safe, healthier place to live is what people are feeling, so they're moving and migrating to that. So where do you go in and buy land and build houses at? In those suburban, rural areas. Now, ladies and gentlemen, time and time again, I've been sitting back and I've been talking about this. This year, real estate domination, we're going to be talking about how do we deal with the housing crisis in regards to the lack of inventory. And I sit here with all my statistics, all my notes, everything that's happening. All of that information, ladies and gentlemen, comes from the National Association of Realtors. So if you want to reference any of the numbers, the statistics, and everything that I'm talking about, this isn't Jerome's statistical information. This is coming from the National Association of Realtors right off their website. It's available to all of you guys to go in, read, see, and educate yourself with. And ladies and gentlemen, month after month, and now year over year for the last 2 years, we're seeing an inventory crisis. And how is this crisis going to be resolved? Well, I'll tell you that these numbers are going to continue. It's not something that's going to end today. And I truly believe that this inventory crisis we have a decade of this, even to correct it. And the solution is you guys. It's you guys understanding that there's an education model that needs to be set in place, which we have already created, where we teach people how to go out and create inventory, not to compete in the market where 7% of rental homes are down. Well, it's because there's no inventory out there. So news alert to all you investors that are trying to get single family home rentals, there's just not enough out there. So if you're getting 7% declines every month, it only takes 10 months for you guys to be at over 70%. And then what do you do in your marketplace when there's no inventory? Well, for those of you guys who don't know, you create it. You create inventory. And so the solution that people are going to get wealthy doing is creating inventory. So you can be what I call a sideliner, right? There's some people that play the game. There's some people that are spectators on the side, and there's some people that never even show up. Ladies and gentlemen, with the folks that want to profit from what is happening right now, we created an educational program where we teach you how to buy land, in what areas, and build houses to profit. Then we teach you how to take and deploy that capital into multi-unit real estate, multi-family specifically, and create rooftops for all of the millions. There's over 6 million Americans that need rooftops in today's current market, today. There's going to be a need for over 30 million rooftops over the next 10 years. And ladies and gentlemen, my question to you is, who is going to fulfill that need and profit from it? Are you going to let Toll Brothers, LGI Homes, D.R. Horton, Pulte, and all the big home builders go in and take advantage of profiting from it? Or are you going to get off the sidelines, get on the field, and take those profits for you to benefit from financially? And that's the question. I know what my solution is. I've been doing it for over 25 years. I've been buying land. I've been creating inventory in the market, even at a time when we were in an economic collapse, when Lehman Brothers fell apart and AGS fell apart, and the world was falling apart financially, starting right here with the US economy. We were still buying land, and we were still building houses, and we were still making profits. And that's what's most important. At the worst economic time in history, in 2008, 9, and 10, we were still buying land, and we were still building houses. Ladies and gentlemen, I sat down and I remember I sold a couple homes, 2 homes that were on the market in 2008. And lo and behold, when it got to tax season, my tax accountant came to me and he said, look, Jerome, you have to send out a check for like $50,000. It was more than, well, we had made more money than we had thought we had made, because we were so busy servicing debt on big assets, retail centers I had under construction, office buildings that I had under construction. It felt like I had made nothing. But the reality is that I had made profits. And the most profitable and most lucrative part of our businesses in 2008 rolling into 2009 was our homes. And I couldn't believe it. I couldn't believe that even in a time of financial distress, when the housing market was falling apart, I had so much equity in my business model in these homes that I was still turning profits in excess of $35,000, in excess of $40,000 on the 2 worst houses with the worst profits that we ever had in our entire existence of over 25 years of buying land and building houses. In the worst economic time, we still made a profit. So while other people were losing their inventory to the banks and going into foreclosure, under our business model, we were still profitable. I couldn't believe it. So I sat down, I got all my subcontractors together, and I told them, I said, hey guys, look, here's what we're gonna do. We're gonna continue building homes, and we're gonna do it under my business model. But you guys have to listen to me. Here's the variable. You're not gonna make what you were making in 2007. I'm not gonna pay you guys the premium I was paying you guys in 2006. I'm gonna call the shots and tell you guys what I'm gonna pay you guys. You're all gonna make a profit, but your margins are gonna be smaller, and mine are too. But we're gonna continue buying land, we're gonna continue building houses. And yes, I might've been making $100,000 per home pre-recession, but after the recession, I sat back and said, hey, if we do this business model and I make $70,000 per home, I'm doing pretty damn good. In a time where economically people couldn't make moves. And yes, I understood that those homes were going to sit on the market for sometimes 2 months, 3 months, 4 months, and even some of them 6 months. But ladies and gentlemen, even as they sat on that market, I still made profits. And we continued to build. I fed subcontractors that wouldn't have gotten fed otherwise. It was funny. The other day I was doing an inner circle meeting in my office, and in rolls Johnny, one of my electricians who we've been friends. We've created a friendship over the last 26 years that we've done business together. And he walked into the office to pick up a check on a project that he had done for us. And it just so happened that I was in front of my inner circle, and I sat back and I told him, I said, hey Johnny, I said, you remember 2008? And he goes, oh, do I remember it? And I told him, I said, there was a time I remember going to his yard, and there was a big ass pile of electrical poles that you put temporary poles in front of houses when they're being built. You put a temporary pole where the contractors plug into. You guys have all seen them. It's just a pole in the ground with an electrical outlet on it and an electrical meter. And so you drive by a new construction site, you see these. And I went to his yard in 2009, and I remember seeing this big, massive pile of temp poles. I mean, it looked like a junkyard of temp poles. And I'm talking it was a mountain, literally, that probably stretched 20 feet wide and probably 4 feet in the air. And it was like a little pyramid of temp poles that were stacked up in his yard. And I said, holy shit, Johnny. I said, what the hell are you gonna do with all those temp poles? He goes, shit, Jay, I don't know. He goes, you know that there was a day in time a couple years ago where every single one of those poles was sitting on a job site, and I was building them frantically here at the office because we didn't have enough of them. And now, Jay, he calls me Jay, he goes, now, Jay, they're all sitting here, and I have a pile of them, don't even know what to do with them. And so at the worst economic time to be buying land and building houses, guess what we were doing? We were buying land and building houses. Because one, we were able to make a profit. Two, I was able to feed my subcontractors, and we continued doing business. At the same time, I was buying Subway stores. I was buying a shitload of Subway stores. I had a ton of stores, and I was growing at a pace on buying Subway stores exponentially that I was sitting back, and the headaches that it was created by buying those stores was so immense that I sat back and I remember thinking, my good Lord, I'm gonna get a heart attack from these damn stores. And so even though I felt like they were a better investment, the amount of work that went into running those stores was so absorbent that I just hated them. And so when I first started selling those stores in 2016, it was the best decision I ever made. By 2018, we were 100% out of the Subway business. I remember turning to my wife and said, I don't care what we ever do ever again, but there's one thing that we'll continue doing, that's buying land and building houses. Because I'd rather buy land, build a house, and have 0 employees and manage subcontractors instead of managing a bunch of pain in the ass employees in the Subway business, where I had hundreds of employees, about 9 to 10 employees on every single store, hundreds of employees. It was a nightmare. I could buy land, build houses, where one store would make me on average of $70,000 a year. With 9 employees per store, I could just go buy land, build a house, and in this day and age, I make $150,000 or better on a house that I build with my business model. So I make double what I'm making in a Subway store with 1/10 of the headaches. I don't have to get a phone call from the police department that my windows have been broken out and someone went and stole my register at 2 o'clock in the morning. I don't have to worry about someone putting a gun to one of my employees' heads and robbing them at gunpoint at one of our stores. I don't have to worry about an oven being broken down or an air conditioner being broken down or a refrigerator going down with thousands of dollars in inventory on it on a daily basis. I can go buy land, build a house, show up 3-4 times a week, make my rounds and spend an hour on there each time I go down. And at the end of a 4-month period that it takes me to build that house, I make $100,000+ profit. Ladies and gentlemen, the solution to everything that we're seeing in the September updates in the market as we continue to see the same things happening is to buy land, build houses, create inventory, and go out and get wealthy doing it. And ladies and gentlemen, that's how you go out and compound your success.